Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehisha. With me as always is Ankita Saxena. And this is a show where we'll be taking you through all the big buzzers in today's trading session, tell you which stocks are in focus today, where is the spotlight today in the markets, and also bring on board our technical guests who will be joining us to give us a tech check on some of those stocks as well. But before we kickstart this edition of Market Fatafat, let's take a look at the markets. It's been quiet as ever since the beginning, but we're struggling to hold on to the 24,400 mark on the Nifty. Nifty Bank, on the other hand, looking resilient, Ankita.
Absolutely. In fact, if we have slipped below the 24,400 level, we were managing to hold on to it, but now we have given up that gain, and we have ticked below the 24,400 levels on the Nifty. Nifty Bank, however, like Snehi mentioned, is more resilient today. It is seeing an uptick of almost 157 points on Nifty Bank. The strange part is that the market breadth looks positive. It is quite even and positive, but it's a Nifty that is very quiet and nothing much is happening on Nifty. But nonetheless, market breadth looks decent as far as the broader market is concerned. Broader market is outperforming the benchmark indices, even though that has slipped into the red. Mid cap is now down 0.3%, and small caps though still in the green is trading marginally with gains of 0.2%. So that is also currently trading towards the day's lowest point. So largely that is how the market is shaping up. If you look at the sectors also, we have Nifty Media that has been the front runner since get-go in the morning. We also have the PSU banks that are doing well today. We have Canara Bank, Indian Bank, we also have PSB. These PSU counters are doing well today. But on the losing side, we have Nifty Auto, Metal, Pharma and FMCG in that pecking order. In fact, the FMCG was reeling under pressure on the back of weak set of results coming in for Dabur. That's weighing down on the sentiment of the entire FMCG and consumption pack. But that's how largely the market is shaping up right now. We have HCL Tech, Titan, that is an earnings candidate that is set to report its quarter 4 numbers. We're expecting good numbers from Titan. So Titan, Axis Bank, Kotak Bank, these are the top Nifty gainers. And on the losing side, we have Eternal, Zomato, Tata Consumers, ONGC, M&M and Eicher Motor on the losing side. That's pulling down the Nifty for now. So right now, market breadth looks positive, but not much action coming in on the frontline index.
Okay, so that's what the market construct is looking like right now. Some Nifty 50 stocks in deep pressure. On the other side, some of them are managing to hold on well. But on that note, let's welcome Ashish Kayal, founder and CEO at Wave Strategy Advisors, on the technicals on the show. And right now we have Ravinder, who's joined us from our in-house research team. Good afternoon to both of you. But before we come to you, let's get started with this edition of Market Fatafat with DB Corp. That's the stock I want to highlight today. It's an earnings candidate. Numbers have come out just, let's say, about 30 minutes or so ago. And on a consolidated year-on-year basis, the numbers look quite weak. The stock has also nosedived 5% as we speak. Revenue has come in at 548 crores compared to 617 crores, which is down 11.3% on a year-on-year basis. Net profit has taken a sharp hit, coming at just 52 crores compared to 122 crores on a year-on-year basis. That's a downtick of 57%. EBITDA 2 at 279 crores compared to 308 crores, down about 9.5% on a year-on-year basis. EBITDA margins on the other side are looking quite okay at 51% compared to 50% almost on a year-on-year basis. But even if you take a look at the earnings fine print on the segmental front, printing, publishing and allied businesses revenue has also come at a cut of 11.5% on a year-on-year basis. Radio revenue also down almost 8.5% year-on-year. So overall, first cut of these numbers looking quite weak, and the street sentiment is also reflecting that on the stock, because that is lower by 5.5% almost as we speak. That's DB Corp right now.
Alright, moving on then. Coming to you, Ashish, you've picked out BSE for us. Now, BSE has done exceptionally well for itself. In fact, today also it's trading up with gains of 3% odd. Tell us what you see on the charts for Discounter, because Discounter has run up quite a bit. Is there more steam left, and what is the upside? What are the targets that you're penciling in for BSE?
Yes, if you look at BSE, there has been a very good run-up that we have seen over the past many weeks, and the stock has done exceptionally well. But having said that, there can be some short-term dip that cannot be ruled out. But overall, the medium-term trend for the stock is positive, and we think it can move towards the level of around 7,500 odd levels on the upside. On the downside, the support for the stock is going to be around 6,600. So any dip from here should be used as a buying opportunity for BSE, and the overall trend remains positive as we see 52 weeks high touching in this counter.
Alright, 52-week high coming in for BSE on the charts. But moving on to the next counter, which is an earnings candidate, and that's Coal India. In fact, Coal India had surged 3% in the morning on the back of decent set of numbers coming in. It has given up those morning gains, is given in to the market pressure right now, is trading at the day's lowest point right now, nonetheless maintaining in the green. But let's take a look at the numbers then. The revenues were better than expected. The margins were slightly below what ET now was expecting. The margin came in at 31.2% versus 33.4% on a sequential basis. The PAT came in above expectation due to higher other income. In fact, the PAT saw an uptick of 13% on a sequential basis and 12% on a year-on-year basis. The EBITDA saw an uptick of 4% on a year-on-year basis. Couple of factors. The offtake was at 201 MT, which is a 4% uptick on a sequential basis. The blended realizations jumped 3% on a quarter-on-quarter basis. Better FSA realizations, that was also up 2% on a sequential basis, and e-auction sales were up 12% on a quarter-on-quarter basis. Now, the brokerages, Motilal Oswal is maintaining a buy with a target price of 480 rupees per share. Equirus Views has a reduce on it and is maintaining a target price of 350 per share. And Phillip Capital is maintaining a buy with a target price of 519 per share on Coal India. On the back of mixed set of results coming in for Coal India, it is currently turned absolutely flat, but nonetheless, in the morning, it saw a jump up of 3%.
Okay, so that's a Nifty 50 counter, absolutely flat right now, but has given up some of the morning gains. Let's move on from that, and Rabinder, will keep it going with earnings and a rather strong set of numbers coming in from Symphony this time around. Stock is also up 6.5%. Take us through the earnings fine print.
Well, a Symphony Eastern Focus company has announced a Q4 number, and the company reported revenue at Rs 488 crore, which was up by 2 times, and PAT company reported a PAT at 79 crore versus net loss of 10 crore on a yearly basis. And margins, if we talk about margins, the company reported margin at 21.9% as compared to 12%, and company recorded highest annual and quarterly EBITDA and PAT of the company, and company says that the overseas subsidiary has done well, and company is focusing on scaling emerging markets, accelerating digital expansion, and company will focus on US market, which is a highly attractive prospect. So back of the strong Q4 numbers, stock is up more than 6%.
Alright, Symphony up in a way 6% on the back of strong set of results coming in, but Symphony also plans to focus on exploring global opportunities. That's the word coming from Rupesh Shah, who's the Managing Director of Corporate Affairs Symphony. Let's go across and listen into what else he had to say about the company's growth roadmap ahead.
We wish to focus and use the management bandwidth completely on large opportunities, quite profitable and growing opportunities in various segments in the country. So whether it is adjacent category, LSV, across the trade channels. Secondly, our Brazil model and China model are working very well, which we are continuing. And through that model and the rest of the world, we believe that we can explore the global opportunities.
Okay, so that's the word coming in from the management of Symphony. Let's move on. And Ashish, coming to you, HCL Tech is the stock that you've picked out for us. Last 6 months, the stock has been lower by 14%, but last 1 month itself, a 13% recovery. So tell us, what's the outlook going ahead? Do you believe that this slip in the stock was a short-term thing, and now can we see good days ahead for the stock?
Yes, it looks like, if you look at the charts over past few weeks, the stock is forming an inverted bottoming head and shoulder pattern, and that's showing some kind of an accumulation at the lower levels. We are yet to see a breakout above the neckline, but that looks to be, we can anticipate that is going to happen. On the upside, the target for the stock is around 1750, followed by 1850 level. That's decent enough target. And on the downside, the support for the stock is 1540. So the risk reward is very appealing to enter long positions at current levels.
Okay, so that's the take coming in on HCL Tech and the levels to watch out for. Let's talk about a stock that's doing well, and we've got word coming in from Uno Minda recently that the company at its meeting held today has considered and approved the setting up of a manufacturing facility for two-wheeler alloy wheels at Bawal in Haryana with an installed production capacity of 1.5 million alloy wheel per annum. It's a capacity expansion move coming in from the company that the board has just approved in their board meeting, that the outcome of which has just come out a couple of minutes ago. That stock saw some sharp gain when the outcome was announced, but right now it's up 0.5%. It was up a good 2.5% when this outcome was announced. The capacity addition will cater the recently secured orders and rising market demand. The total capital expenditure for this capacity expansion is estimated to be around 200 crores. And in parallel to this, the company has also commenced commercial production of expansion project of additional 2 million alloy wheels at Supa in Maharashtra. With the setting up of this facility, the total annual production capacity of two-wheeler alloy wheels of the company shall increase from 8 million to 9.5 million wheels per annum. So positive news flow coming in for Uno Minda, capacity expansion, and on the back of that, the stock is up 0.5% as we speak.
Alright, moving on to the next counter, Ashish. On the charts, you picked out Reliance for us. Now, Reliance has given very flattish move in the last 1 year. The only time we saw Reliance really move up is after it posted its Q4 results. But then nonetheless, it has turned absolutely flat move coming in there. But tell us, what do you see on the charts for this counter? Do you see this moving up again?
Yes, it looks like, see, Reliance has been the top performer. If you look at it from the low of 7th April, it has been the reason why the index is currently at these levels. We can clearly see over past 3 or 4 days, it's forming a flat kind of a retracement, and this is a continuation pattern, so it should eventually give a breakout on the upside. We can expect Reliance to move towards the level of 1500 or higher from here on, and on the downside, the support for the stock is around 1380. So overall outlook is bullish for Reliance.
Okay, that's the outlook on Reliance. Like United Breweries too in focus.
Yes, absolutely. United Breweries is also in focus today on the back of its Q4 results, and it's largely inline set of numbers that are coming in for United Breweries. If you look at the revenue, that's up 9% on a year-on-year basis at 2,323 crores versus 2,132 crores. Also, we saw a PAT tick up of 20% at 98 crores versus 82 crores on a year-on-year basis. The margin came at around 8% versus 6.7% on a year-on-year basis, and we were estimating a margin of around 7.9%, so and thereabouts. So it's largely in line, and EBITDA was also up 30% on a year-on-year basis at 186 crores, which was largely in line with what we were penciling in. Now, United Brewery has also succumbed to market pressure. Currently, actually, a lot of stocks are trading at the day's lowest point right now, and so is United Breweries. That is now down 1.4%.
Okay, that's the move on United Breweries. But Ravinder, coming to you, Dabur India is a stock that you've picked out. At first glance, it seems to be like a weakish performance. Take us through the earnings fine print.
Well, as Dabur India has reported a Q4 number, and company reported revenue at rupees 2,830 crore, which was flat by year-on-year basis, and company's net profit was down by 8.5%, and company reported an EBITDA margin at 15.1%, which was also down by 100 basis point year-on-year basis. And if we talk about segmental performance in Q4 FY25, then the home and personal care business was down by 3.5%, and healthcare business was also down by 4.5%. Management said that the rural demand grew by 13 and 14%, while the urban demand remained flat in Q4, and they say that the value growth will be high single to low double-digit growth in FY26, and there are also some brokerages note coming in where Nuvama has maintained the buy rating, and they have cut the target price to 615, and Motilal has also come there note where they have maintained the buy rating, cut target price to rupees 575. So back of the week Q4 number, stock is down 2.5%.
Alright, moving on then, before we get to the next counter, let's take a look at how the market is shaping up right now. Look at Nifty right now. It has nosedived. In fact, Nifty and Nifty Bank, also Nifty Bank from the last half an hour, it has fallen 117 points. So it's a sharp correction that is coming in right now. In fact, like I mentioned, all the stocks that were doing well in the morning are also trading towards the day's lowest point there. If you look at the chart, there's a sharp decline coming in on Nifty Bank as well. Nifty Bank, that was managing to hold on to some gains, has absolutely turned flat right now with that correction coming in, and most of the counters trading towards the lowest point of the day. But we'll get you more on that. Moving on to the next counter that Ashish has picked out for us. ONGC is what you've picked out for us. Ashish, tell us what you see in the charts for this one.
See, ONGC has been under pressure, and we can see that the stock has underperformed since quite some time. And even today, it's failing to go above the Friday high. So, and it has been moving below the 20 DMA also. So that, having said that, the overall trend for ONGC looks to be sluggish over short term. We can expect the stock to move towards the level of around 220 on the downside, and on the upside, 240 is going to be the immediate hurdle.
That's the take on ONGC. Before we talk about Titan, just want to once again bring your attention back to the markets. India VIX is up 2.7% now. Remember, it had cooled off significantly We're once again above the 19 mark and 19.5 mark that we've reached. Once again, a sharp spike coming in India weeks. We understand there are some developments happening at the border right now. We'll be bringing you more news and updates as and when we have them. But from now, we have word coming in from the External Affairs Minister, who's saying that it's not our intention to escalate the situation and any military attack will be met with firm response. Maybe this is what is capturing the market sentiment right now. And like I mentioned, we'll bring you more as and when we have the details. But on that note, let's once again move on with the show and talk about Titan. That stock is in focus today because the numbers of this company are going to be declared soon, and here's what the street is penciling in. We're expecting a good set of numbers from Titan, and that's what the stock is also showing 1% uptick from now itself. Because remember, in the quarter 4 update also that the company had released, it was a rather good looking update. Revenue was seen at 13,071 crores, up 16% year on year. EBITDA also we're expecting at 1,296 crores, which is an uptick of 17% on a year on year basis. Net profit anywhere around 820, 830 crore rupees, up 5%. EBITDA margin is where we are seeing a little bit of a pressure, penciled in at 9.9% compared to 11%. Core jewelry EBIT margins are likely to be impacted by high marketing costs, and high single-digit same-store sales growth is what we're expecting to see as well. We're also expecting a rise in finance costs for the company given an increase in the gold metal loans rates for most jewelry companies. Remember, this time around for Titan, this rate is at 4% compared to 2.5% earlier. So this is something that could weigh on PAT going ahead as well. But that's the take on what the street is penciling in for Titan. Stock up 1% as we speak.
Alright, moving on from Titan, coming to you Ashish on AU Small Finance Bank. Tell us what are you seeing on the charts for this one?
See, overall, the banking sector as a whole has done very well. The financial sector as a whole has done very well, and EU Small Finance Bank is showing some profit booking from the highs, but the overall trend still remains bullish. The stock has not broken the prior low also. So, having said that, I think it's time to keep buying the stocks on dips. We can expect it to move towards the level of around 740 on the upside, and the support for the stock is around 670 levels.
Okay, so that's the take on AU Small Finance Bank. Ravindra, will come to you for Tata Chemicals, once again an earnings candidate. Take us through what the numbers look like.
Well, as Tata Chemicals is in focus, our company has announced its Q4 number, and company reported a revenue at rupees 3,509 crore, which was flat on a year-on-year basis, and net loss was down by 49 crore as compared to loss of 841 crore, and company reported EBITDA at rupees 327 crore, which was down by more than 26% on an annually basis. And the company says the demand supply balance continue to be soft and coupled with uncertainties in soda ash trade driven by the tariff changes, and medium to long term trend is positive driven by sustainability application. Even with the short-term margins remains challenges. So back of the weak Q4 number, stock is down approx 1%.
Alright, moving on from Tata Chemicals to the next counter, that's Sonata Software that has reported its quarter 4 numbers. Let's take a look at how the numbers are shaping up. A decent set numbers coming in. On a sequential basis, we did see a downtick of 7.9% on the revenues, which came in at 2,617 crores on a sequential basis. The PAT saw an uptick of 2.4% on a quarter-on-quarter basis at 108 crores versus 105 crores. The margins also saw an expansion of 110 basis points, which was at 5.7% versus 4.6% on a quarter-on-quarter basis, and the EBIT also saw an uptick of 14% on a sequential basis. A good set of numbers coming in there for Sonata Software. That is trading with gains of 0.6% as of now.
Okay, so that's Sonata Software and earnings candidate, and that's what the stock is reacting. That's how it's reacting to its numbers. Let's talk about ICICI Bank, Ashish. That's a stock that you've picked out for us. On a year-to-date basis, the stock is up 12%. Last 1 month also decent moves coming in. Last 1 year also the stock has done okay for itself, on a 30% uptick coming in. Tell us what's the outlook going ahead on the charts, and do you believe that the performance that we've seen on the charts can sustain going ahead?
If you look at ICICI Bank and do a ratio analysis with respect to Bank Nifty, I think ICICI Bank is outperforming within Bank Nifty itself. We can see that Bank Nifty has been correcting over past 8 to 10 days, but ICICI Bank is nearly touching its 52-week high from here also. So the overall trend for ICICI Bank is positive. I think the stock can move towards the level of around 1470, 1480 on the upside over near term, and on the downside, the support for the stock is going to be around 1420 levels.
Alright, moving on from from ICICI Bank to Blue Star, another earnings candidate. Ravinder, tell us, what does the report card look like?
Well, yes, another earning counter Blue Star is in focus. Our company's revenue grew by 21% on a annually basis at rupees 4,019 crore, and company reported a net profit at 194 crore, which was up by approx 22% on a annually basis. And if we talk about margins, then the company's margin was down by 32 basis points from 7.3% to 7%. And board has also approved reappointment of Veer S. Advani as a chairman and MD for next 5 years. Company says that the room AC business achieved exceptional growth aided by intense summer and stocking by channel partners. And there are also some brokerage note coming in where ICICI Security has maintained their ad rating with target price of rupees 1925. So back of the mixed Q4 numbers, stock is down 2.5%.
Okay, so that's Blue Star, and the reason the stock is trading lower on the back of a mixed set of numbers coming in. But we also interacted with the management earlier in the day, and demand recovery is on the cards in May and June, according to the management. Veer S. Advani, who's the CMD of the company, listen into what else he had to say about the demand picture and the company's growth roadmap going ahead.
Already 1 week into May, it again has been unseasonably rainy. But we're still very hopeful that May and June are going to be hot. The IMD forecast is still for a very hot summer. So we remain optimistic, but heavily dependent on the summer. We have a brownfield expansion of our room air conditioner plant, which is underway. We have a brownfield expansion of our commercial air conditioning equipment plant, again, that is underway. These are two big investments, and we're setting up a R&D center in Pune, which will be focused on electronics design. So that has also been approved and is underway. So we've got some fairly significant capex planned for FY26. We're looking at deploying about 600 crores of capex versus last year's roughly 400 crores.